Hey guys, today we are going to be talking about tax. Tax. See, the way they tax us in this country, if we are not careful, we run back to our countries. I'm joking, don't go anywhere. We are here. But honestly, so today I just want to talk about tax, how to calculate your tax, how to make sure you're not being overtaxed, how to make sure you get your tax refund for like the last tax year, just everything tax related. If you've ever been confused about taxing, you want to know how it works, you want to know how they take your money and stuff, then this is actually the video for you. So stay tuned till the end, because I'm going to actually teach you, I'm going to go through the entire process with you, and we're going to do that. So first things first, remember that I've partnered with Amber Students to provide student accommodation to you. You want to get those picture-friendly accommodations, just click the link in my description below and it's going to take you to like different accommodations in like different parts of the UK. So just do that and that's about it. So today guys, we're going to talk about income tax, national insurance deduction, your total income after tax, your tax code, how to create a personal tax account, and how to claim your tax refund. These are all the things that we're going to talk about in this video. If it gets long, I'm going to cut it and make it 2 videos. So if you actually watch to the end and it doesn't actually say, or like it doesn't, I don't talk about the part that you're interested in that I said I would talk about, then just watch out for the second part of the video, because I've actually put together like a really long material. I'm going to explain the whole thing and I'm going to do it taking my time so that I don't rush, so you can understand me, because there's no point making the video if after watching the video you don't understand what I'm saying, if you get what I mean. So stay with me guys. Income tax. Income tax is a tax you have to pay the government based on your yearly income, and it is calculated based on your income band. Now, most people pay their income through what you call pay as you earn. It's a system where they take off the tax before you even get your money. So what you get is your money after tax. There are some other ones where you get your complete money, but then you have to like sort out your tax and everything. But that's actually a bit confusing. But I'm just going to talk about pay as you earn, which is the amount of money that they take off your income before it gets to you every month, every week, depending on how you earn. The tax year usually starts from 6th of April and it ends 5th of April the following year. So it doesn't start in January and end in December. The tax year for this year started on the 6th of April 2022 and it will end on the 5th of April 2023. Now, almost everyone has an income-free allowance. That's like an amount of money where if you earn below it or if you earn just about that, you don't get taxed. And the personal allowance is 12,570. So anything you're earning for the year, if you earn below 12,570, you're not supposed to pay tax. And if you've paid tax at the end of the tax year, you get like a tax refund for the amount of money that was taken. Now, your personal allowance may be bigger if you claim marriage allowance or blind person's allowance, and then it's smaller if your income is over 100,000. Then the income tax bands are different in Scotland. So if you live in Scotland, this might not apply to you. So maybe you might want to check out for someone living in Scotland. This is basically for England and any other place that it applies to. So let's do a real life example so it would all make sense to you. Okay, so let's say you have a job, you've been offered a job and they're offering you 30,000 for the year, and you've not worked for that tax year. So let's say your 12,570 pounds personal allowance, personal allowance, something is still intact, so you have it in full. Let's calculate how much you would actually take home every month. Now bring out your calculator guys. I'm going to bring out mine and I'll try to put it on the screen so you can see what I'm doing. I'm going to display a table now. I'll put it on my screen. I'll put it on the screen somewhere so you can actually see it. So obviously I've talked about personal allowance. If you earn up to 12,570 or lower, you're not going to pay any money, so your tax rate is basically 0%. Now if you earn within the basic rate, which is between 12,571 to 50,270, you're going to be taxed. Your tax rate is going to be 20%. If you earn the higher rate, which is 50,271 to 150,000, then your tax rate is going to be 40%. If you earn an additional rate, which is over 150,000 pounds in a year, your tax rate is going to be 45%. So now let's do the maths. 30,000 obviously falls within the basic rates, so your tax rate is going to be 20%, right? Remember the table I just displayed. Now for starters, the 20% you're paying is not 20% of the entire 30k. So don't just say 20% of 30,000 and then that's my tax for the year. No, you're actually going to get it wrong. First off, what you need to do is you need to remove your personal allowance, which is 12,570. So if you say 30,000 minus 12,570, what you have left is 17,430, which means that you're going to pay 20% tax on 17,430. You're not paying 20% of 30,000 because you have 12,570 free, untaxable, if that's a word. So 20% of 17,430 would give you 3,486 pounds. So that's the amount of tax that you're going to that's the amount of income tax you're going to pay in the year. Now let's not forget there's also something called national insurance contribution. So if you also earn above 12,570 in the year, you're going to pay national insurance contribution. Now everyone has a national insurance number. It can be used to track your earnings for the entire year. It can be used to, it's what's basically everything concerning your income. Your national insurance number is used, everything concerning tax, everything, your NI, they call it NI number just for short, but it's national insurance number. Paying for national insurance is mandatory, so provided you're over 17 and you earn above 242 pounds in a year. And if you're self-employed and making a profit of 6,725 or more in a year, you also have to pay national insurance contribution. The percentage of your income which is being deducted depends on your income, so you have to pay an national insurance of 13.25%. So provided you earn below 50,270, and then if you earn above 50,270, you pay an additional 3.25 to your previous to the previous amount. Now we are still doing the whole calculations. So now for the national insurance, we're basically going to do the same thing. You have 12,570 untaxable, and also they can't take national insurance off that. So the first thing they're going to do is you take out, just like we did for the tax, you take out 12,570 from your annual income, which is 30,000, and then you're left with 17,430, and then you say 17,430 times 13.25%, because that is the annual national insurance deduction for the year. So when you do that, you're going to have 2,309.48 pounds. That's the amount that is going to be taken off your annual income for national insurance deduction. Now if you add 2,309.47 or 0.48 to the previous income tax we calculated was 3,486, so the total amount that will be deducted from your salary is going to be 5,795.48 pounds. So that is the total amount. So bear in mind that some jobs might take pension, maybe some other mandatory or optional deduction. So everything I'm calculating here is assuming the only deductions that are taken from your salary is your income tax and your national insurance. For pension, you can actually opt out of pension plans that you're being put into and all that, but we can actually talk about that much later. So if we deduct 5,795.48 from 30,000, that's going to be what you would earn in the year, and it's going to result to 24,204.5. so that would be your annual income after tax and national insurance deduction. If you divide this by 12, you get 2,017 pounds. So that's what you will earn every month. If your employer pays you every week, you can further go ahead and divide by 4, and then you know what you can earn every week. So that's about it if you earn 30,000. So if you earn 30,000 a year in the UK, don't think that the whole 30,000 is going to be for you. Sorry to break your heart, but you're only going to take home 24,204.5 pounds at the end of the year. And if you divide that into 12, you take home 2,017 pounds monthly. So that is just about it. Now let's pick another figure. Let's take a higher yearly income, the one that falls not in the basic rate. So I'm going to say, let's pick a figure, say 55,000. Obviously 55,000 falls in the higher rate, so it's going to be 40%. But now don't think, just like we did not do 20% of 30,000, we're definitely not going to do 40% of 55,000. So we're going to do the entire process again. So follow me, guys. Okay guys, so we're going to be keeping figures in some places, so just keep it where you remember it. I'll try to leave it on the screen so you can actually remember what it is. So now the first thing to do is, if you look at the table again, it shows you that for the basic rate, which is the 20% one, if you earn between 12,571 to 50,270, that is when 20% will be taken off your salary. So basically that's how it works for this 55k, because the 40% is only on the excess. So the 40% will only be on 50,271 to 55,000, if you understand what I mean. So they're not just going to take out 40% of the whole 55,000. If I say 55,000 minus 50,270, I'm going to get 4,730. So let's just keep that there. That is the excess of the basic rates, if that makes sense. Yeah, now let's calculate the tax for your earnings up to 50,270. So the first thing to do, just like we did for the 30k, you subtract 12,570 from it, and then you'll be left with 37,700. So if you do the income tax, which is 20% of 37,700, you're going to have 7,540 pounds. That's going to be your income tax that you will pay for the year. And then for national insurance, which is 13.25, you say 13.25 of 37,700, which is what we have after removing 12,570. Don't forget, guys, you're going to have 4,995.25. So the balance you have from 37,700, don't mix it up, guys, is 25,164.75. But that's not your annual salary, so don't be scared. That's the balance you have from 37,700. So keep this one aside first. Now the next thing to do, remember the excess of 4,730 that we kept aside. Now it's time to work on it. So you say 40% of 4,730, you're going to have 1,892. Then NI, for NI, remember that if you earn above 50,270, there's an additional 3.25 on your national insurance. Yeah, so we're also going to do the 3.25 of that excess. So now 3.25 of 4,730, you're going to have 153.725 pounds. So the balance you have from 4,730 now is 2,684.275. Remember, we had the balance of 25,164.75. Remember, we had that balance. So now your total take home now will be this 2,684, which you had after removing 40% and 3.25 from the excess of the 55,000. You had 2,684. So your total take home now will be 2,684.275 plus 25,164.75 plus your tax-free allowance, which was 12,570. So if you add everything up together, you're going to have 40,419.025 pounds. So if your annual salary is 55,000, you are going to go home with 40,419.025 pounds, which is almost 15,000. That's, you're earning 55,000, but you're going to only be taking home about 40,000. So you're going to be paying about 15,000 pounds in tax.